Who would have thought, right? I was in Waterloo staying at my friend's place, and then out of nowhere, something happened, the audio didn't work, and then here I am.
Well, you were meant to be.
Yeah.
Right? Like this was all meant to happen today.
Yeah.
I'm going to call that more than a blip, less than a crash. Oh, I lost audio. Why is this happening today with my boy? I hope he didn't lose me.
Hey guys, my name is Aakash. If you're new to this channel, I make videos on the stock market, business, and my personal life experiences. The reason I started this Business Nerd podcast is because I wanted to help you guys build your business while I build mine and document my journey, share my experiences. I've had some amazing guests who have shared a lot of their journeys, their secrets, complete blueprints. If you haven't watched already, please go check it out. I have only one small favor to ask you. Please go like, share, subscribe, share this podcast with somebody who is already in the process of building a business. I'm sure it's going to add a lot of value to them. If I haven't added any value to you, please let me know. I'd like to improve. As this channel grows, it allows me to bring on more guests who like to share their experiences from different industries from all over the world and helping you guys build your business. That's all I ask. Please go like, share, subscribe. And now back to the podcast. All right, Jas, good morning. When I usually do a podcast, I give out some roses and I have a short intro for you. Do you want me to go?
100%.
All right.
Well, where's the actual roses?
I'm sorry, man. In this episode, we have an entrepreneur, Jas Takhar, from the real estate world, a remarkable public speaker, content creator, runs a media company, a real estate company, and I'm here with him to ask him all the questions about his strategies, his learning, his story, and I'm going to try and extract all the information I can, all of his stories, and just trying to add value to you. I mean, Jas, you've been incredibly kind to me. You've got me here. I mean, thank you so much. How are you doing today?
Not well. First and foremost, thank you for having me. Second of all, for you to accommodate me and do it at my office, I want to thank you for that as well. It's a little easier for me when you're coming to my home because I got the crew and we can kind of set up and stuff. And third, kudos to you, Aakash, because as a fellow content creator, now I've been doing it for 3 years, I can tell you that I know how tough it is. Number one, in that sense, it's tough because you got to put yourself out there, right? It's not comfortable for everyone. Definitely at the start to have, we have 3-4 cameras running right now, right? And then we have the crew behind there. So A, to put yourself out there. B, to like book guests and then cancellations happen and then friggin' technology screws up and all that stuff happens, but you keep going. And then to I'm an energy guy. I feed off other people's energy. Positive and negative, sometimes on the negative side, where I need to make sure that I'm always sheltering myself from that. But you're putting out a lot of positivity, and so I think that's important, man. Look, I think people who are watching and listening are going to get a lot of value not only from today's episode, but all your other episodes because I saw how you walked in here today. We spoke on Zoom because we tried to do it on Zoom I think it was last week or a couple of weeks ago, and I could just feel that energy of positivity. And that's important. The world needs more of that, man.
Yeah. Who would have thought, right? I was in Waterloo staying at my friend's place, and then out of nowhere, something happened, the audio didn't work, and then here I am.
Well, you were meant to be.
Yeah.
Right? Like this was all meant to happen today, right? Sometimes we just don't see it like that. I always laugh with people like, if when you're leaving home, sometimes you forget your keys, or like you've actually got your keys, you're driving and you forget your wallet, right? Most people's reaction is like, fuck, I forgot my wallet, I got to go back and now I'm going to be late. You know what I always think of? It was meant to happen because maybe I wasn't supposed to be on the 401. At that time I was supposed to come back, and so I'm a big believer of things happening for a reason, not to over dramatize it all, but man, you're supposed to be here. We were supposed to do this live in front of a bunch of cameras. That's it.
Yep. I'm super pumped for this podcast because I'm confident you have a lot of value to add. The whole conversation is going to revolve around real estate, marketing, sales, all of that nature. And so first, right off the bat, Jas, before I get into the details of strategies and mindset and everything, tell me something, the current conversation that we are having about the market, real estate market. Is it sort of like a micro blip in a macro theme, or is it just a long-lasting play?
I've been in, just to give people some context, like where the data's coming from. I've been in the real estate world now for 18 years. Okay, I have a team of 60 agents. We have support staff of coming up to like 14, 15 people with the two companies. Okay, the media company that you mentioned and the real estate company. But my 60 agents, we do a little over 700 transactions a year. Okay. Again, not to impress people, but to let people know where the data's coming from.
Yeah.
So my 60 agents, myself, we're really like, we got our boots to the ground, right? And so because we've been doing it for a while, we've seen markets like this before. They're always a little different in their nature, and this one definitely is as well. To your question though, are we, is this going to be long lasting? Is this a blip? I think it's just a correction. Anything that goes up has to come down at some point. To think that the real estate market or the stock market or Bitcoin or crypto is just going to keep going up and there's not going to be some corrections, it would be completely naive. Okay? And so that's what we're going through right now. In fact, when I mentioned how this is a little different, what is different in today's market is we printed a lot of money. Back in 2020, okay, and then going into 2021, obviously because of COVID, we needed to print money, okay? How much they printed, look, I don't personally agree. I don't think we should have printed that much. I actually don't even think we should have been locked down as long as we were. Different conversation for a different day. From a real estate perspective, though, as they printed money, right, we now have to, where we're sitting right now, curb inflation. It's just, it's flirting around in today's recording around 6.2, 6.3%. That's the numbers that we hear from the Bank of Canada. It's probably actually more because if you go to the grocery store, your grocery bill, your gas bill, everything has gone up. And so because of that, now we need to find ways to curb the inflation. And one way that the Bank of Canada and the Government of Canada have always done that is to increase interest rates. Now, when interest rates get increased to the amount of times that they got increased in 2022, I think there were 7 increases. And they weren't small, like a quarter point. There was a couple of 1% increases. There was a few 0.75s. And lately there's been a couple of 0.5% increases. Well, what that's going to do now, and there's a metric that you can't really calculate, but you can feel, and that's called consumer confidence. Cost of borrowing goes up, people start to get a little worried. The conversations at home is, honey, let's not think about buying anything large. Well, what's the largest purchases? Real estate, maybe cars, you can think about vacation homes and all that kind of stuff. And so right now, that's what we're seeing. We're seeing less sales, okay, to the tune of 50% of less sales, okay? Now, values have not come down in every single market. They've come down in certain markets, but not in all markets, specifically where we practice, which is the Greater Toronto Area. For your out-of-province, out-of-country listeners, that's a 50-mile/75-kilometer radius. So that's, again, a big sample size, okay? The values haven't gone down in all the little micro markets in that 75-kilometer radius. I'm going to venture to say, Akash, there's probably, I don't know, a little over 1,000 micro markets. Like, the Waterloo market is different than the Brampton market. The Brampton market's different than where we're sitting today at my headquarters at Don Mills, which is different than the downtown condo market. So not all areas have gone down. I believe the second that Bank of Canada makes an announcement, and the next one's coming, I'm not sure when this podcast is going to air, but the next one's coming January 25th, 2023. If they make an increase of 0.25% or leave it neutral, that consumer confidence is going to change. And then what we're going to start to see is people start to put their homes on the market again, okay? Because they're going to look for what they need to do. People need to move into bigger homes. Not all of them are doing it for the flash, like just to flex on Instagram to show that they have bigger homes. They actually need bigger homes. Families are growing. Or people need to move closer to their jobs. So the reason that's not happening now is because they don't want to move into a bigger home because the cost of borrowing has gone up. But once that consumer confidence comes back, we're going to start to see more homes on the market. We're also going to see more buyers come back into the market. Even today, as we sit at the time of this recording, end of 2022, we're not even yet in really a truly balanced market. We're still in a seller's market, but like very, very close to a balanced market. How do we know that? It's always based on months of inventory.
Okay.
When you have 0 to 3 months of inventory, you're in a seller's market.
Okay.
3.5 to 5.5 months of inventory is a balanced market. Anything above 5.5 months is considered a buyer's market. We're sitting slightly under 3 months of inventory.
Okay.
How do we calculate that? That's calculated based on how many homes and condos sold the previous month, how many homes and condos are on the market as of today, how long would it take to sell all the inventory. And so right now, if no new homes or condos came on the market, it would take a little over two months and 3 weeks.
Okay.
Okay, so almost 3 months. Okay,
To get in the buyer's market.
to get into a balanced market.
Balance.
We're
Oh.
still in a balanced market
Yeah.
across the Greater Toronto Area.
Okay.
Now, there's certain markets that are already in a balanced market, but overall in the Greater Toronto Area, we're still under 3 months of inventory.
Wow.
So, I'm not here to tell you that oh, you know, you should buy and you should buy 7. Like, I don't talk like that. That's
Yeah,
like,
yeah,
if
yeah.
anybody wants to, go through my content, you'll get a good understanding of me.
Yeah,
You might not
yeah,
like what I say,
Yeah.
but you'll get at least a good understanding.
Yeah.
And what I mean by that is that right now you have to look past just the headlines. There's a reason that the news and like mainstream media, as well as social media, as well as like newspaper articles, they put very catchy headlines
Yeah.
because that makes people click.
Yeah.
Back in the days, it used to make people buy the newspaper, right? If we had a storm here a little while ago, and I actually should do like air quotes because they were calling it a storm in Toronto. Some parts of the Greater Toronto Area got hit harder, but Toronto really didn't get affected that much.
Yeah.
But man, when they were saying a storm for 2 days, everybody was talking about it, right? Because that's what the headlines were. Real estate
Yes.
market is the exact same. It's something that's always talked about. I actually call, it's really real estate porn, meaning that like it's actually people search what homes they should be buying more than they search porn.
Yeah.
Because it's such a catchy subject to be speaking about, and it's very easy to get people to click. Again, long-winded answer to your question. I think this is a small blip in the market. It's just a matter of what happens with interest rates in the next couple of announcements. The Bank of Canada's job is not to continuously increase rates because they don't want to put us into a depression.
Yes.
Right? Right now, I think you can say that we are in a recession. They don't really want to say it.
Yeah.
They, meaning the government, they don't really want to talk about it. But I mean, a recession is always calculated by two negative two decreases in GDP growth consecutive quarters.
Yes.
We hit that,
Yeah.
right? Nobody really was talking about it, but we did hit it.
Yeah.
But again, I just think real estate over a long period of time, big sample size of 100 years in the Greater Toronto Area, on average, values double
Yes.
every decade.
Every decade.
Every decade, right? And so
Okay.
if you're somebody who's looking at real estate, specifically on the investing side, as a short-term play, like you're trying to day trade it like you would a stock,
Yeah.
you might lose your shirt. Like you might
Exactly,
lose in this, right? In fact, it's not something that my firm and I actually ever talk about, the buying and the flipping,
Yeah.
because it's so speculative, right?
Yes.
Like what if you bought last year and now you were trying to flip it in a certain area, you did the renovations, well, you might be losing money, right? Where if you hold on to your real estate for a decade in the GTA, on average, you have a high probability that the values were going to double. You had the mortgage being paid down. You now can refinance that money if you have the stomach for it
Okay.
and buy 2 more.
Okay. That's one of your strategies. I'm going to get to that after this question. Jas, you talked about recession. You talked about how this is just just a correction. We've seen numbers, growth terms in terms of 20%. Is that just an anomaly in this last 2 years?
20% in real estate, you mean?
Yeah, year on year.
Yeah, like that.
Is
so-
that an anomaly, or is it just, or is it something that people should be still expecting out of the market?
No. In fact, when if you go back to my content, and now I'm glad because now it's easy to make content than ever before, but it's also you're on record now, right? And I've done so many videos of telling people, look, it was actually like 21.6%. I think one month, I think it was like 22% in 2020, early 2021. And I was telling people like, A, don't get used to it. B, this is not good. Anything that goes up that fast has to come down.
Exactly.
Okay. Especially in the GTA, we've never really when I say we, like actual investors. Before being a real estate broker, I'm an investor. I'm looking to see, find ways to create wealth as well, just like everyone else trying to get out of the rat race, right? That I would rather have small little increases year over year. What's the average in the last 40 years in the GTA? 7.2%.
Okay.
For me, my money compounding, 7.2% year over year. Akash, I'll take 3.5%, 4%.
Exactly.
Cut that in half and I'm okay because it's compounding.
Yeah.
Einstein said the best invention of the world was compound interest. It is because it's on top of each other, right?
Yeah.
Where the 20%, that's actually more for like our friends in Alberta. They go through that a lot. They'll see 15, 18%, and then they'll come back down. You'll have these big peaks and valleys. Where in the GTA, it's kind of slow and steady. However, the anomaly, the outlier, was end of 2021 or mid 2020. End of 2020, mid 2021 was when we saw these massive increases. And I think people got used to it. On the flip side, just like people got used to low interest rates. Like my first property I bought back in 2006. And my 5-year fixed rate at that time was 4.5%.
Oh.
My brothers and I, we each bought a home together, like separate homes, but at the same time. So we all got the same mortgages. We left the bank laughing, thinking we robbed them. Because at 4.5%, it was an amazing interest rate. This, there was an introductory rate for some people at 1.99%. But on average, you could get a mortgage, back in 2021, 2020 for like 2.5%. People got used to these interest rates, but that's not real. That was never what was going to be long lasting.
Yeah. That makes a lot of sense. I mean, because of these different markets like crypto, the stock market, there's options and everything, so many sorts of markets. People get used to all these growth terms of day trading out of 20%, 30% on a single day. And they kind of bring that mindset into the real estate world and they expect that this is going to grow. And since the balance sheet was so much expanded, now they're contracting it because of the interest rate hikes and everything. This kind of seems like a shock to the market. Then people run away from the market and then they say that real estate, they lost a lot of money. And it's the whole the game that works.
Yeah, for me, man, real estate is the get rich slow scheme.
Exactly.
It's.
I mean, the whole business world should be like that.
Yeah, I mean, even I agree with you, man. In business, people want to make money really quickly, and I get it. They're watching their friends, or they're watching, people that they don't even know, maybe on Instagram and on TikTok, or on YouTube, make a lot of money at a very young age. Look, for some people it works, and for I'm going to say most people, that's not how business pans out. Business takes time.
Yes.
Real estate needs time. In fact, the more time that you're invested in real estate, the higher your return's going to be.
Yeah.
It's the wanting of getting rich quickly that I think hurts people. And you're right, man. Like, I think people bring the stock investing mindset into real estate. Now, I'm not here to tell you that investing into stocks is a bad idea. Full transparency, I don't invest into stocks, not because I don't believe in them. It's just because I'm not educated on it. So it's not my world. But I know a lot of people that know a lot of people that are they're billionaires in that business, right? And in that way of investing, it's just that real estate, you can't day trade. You can't buy something today and flip it tomorrow, right? And to actually get a higher return, you're so much better to just hold on to it a longer period of time because then you have more options.
That makes a lot of sense. Now, just talk about mindset. I mean, you have 17 years of experience of playing in the dirt, like sales, transactions, and everything. Talk to me. How do you actually close a client when you were actually starting off and you're showing off all these properties to your clients? How was that typical transaction, the sales call looking like?
Yeah, so for me, great question, by the way. But for me, like it's not just my real estate experience in sales. For me, I've been in the sales and service industry now for coming up to 28 years. As a 12-year-old, like my first paid job was newspapers.
Okay.
And you had to knock on doors, get subscriptions, then make sure you deliver the newspaper. And the nicer you were and the better service you provided, the bigger tip you were going to get. And so I caught on to that pretty quickly. Then I went into shoe sales, then I went into banking, and then I was in car sales for 3 years. And now real estate coming up to 18. And so my thesis, my mindset when it comes to sales has never really changed.
Yeah.
Okay. And what it is that I never really try to close people, but I get the term. I understand where it comes from. I've always tried to sort and not convince.
Okay.
What I mean by that is that I've also known back to like when I was knocking on doors for newspapers, some will say yes, some won't. So what?
Okay.
It becomes a numbers game.
Yeah.
Okay. So I'm just sorting to see who is ready.
Okay.
I get the question about how did I grow my staff, not my 60 agents. They're just the 60 agents is slightly different. Okay. There's some similarities, but there's some big differences. My staff, my team members, the ones that are here, that actually work with me. I have the same mindset. I sort.
Okay.
I bring people on. I don't look. Way's the videographer behind us right now. I mean, I don't even think I looked at his resume. I'm sure did you give a resume to us, Way? You did? Okay, great. I have no idea. Okay. Why? Because I'm like, let me see him.
Okay.
Let me talk to him. We're going to talk. Let me feel his energy.
Right.
Let me feel his vibe.
Yeah.
He's going to tell me that he's a great videographer.
Okay.
He's not going to tell me what he's not good at.
Yes,
I know that.
of course.
Okay, because most people are not comfortable with that. And I'm going to ask, he's going to tell me he's the hardest working person and he's going to work his ass off.
Yeah.
So my thought process is, let's put you to work.
Okay.
Let's see. Right?
Let's test.
And we're going to sort. And now, Way, you've been with us for 6 months? Yeah. 6 months? Yeah. I personally feel Way's going to be with me for another 6 years easily.
Wow.
His attitude is good. He comes to work. He does work hard. He's a great videographer. Yeah. He's a great editor. He has things to learn. He has weaknesses like everyone else. I don't care about his weaknesses. I just want to know his strengths, and let's go all in on those strengths. Now, here's the sorting process. It's a little difficult to sometimes be around Jas. Yeah. Not because I micromanage, not because I yell and scream. I don't think, Way, have I ever even raised my voice to you? No. Okay. Have you ever seen me raise my voice? No. Okay. Not because
You're super nice, sir.
Well, I think so. Right? But what I'm sorting for is, can you work with me? Because I know I bring a certain amount of energy that doesn't fly with everyone. Like, I like to have a lot of fun. I think I'm a kind person. I think, okay? But I also want to work. Like, we need videos to edit, Way.
Yeah.
We need videos to shoot.
Yes.
You do need to be creative. You need to put in that time. Now, for some people, they're not going to like that.
Yeah.
They're not going to like that. And so when it comes to clients, okay, and I'm bringing it full circle for you, I've always been the same way. Some people are not going to like the way that we do business.
Yeah.
I'm a straight shooter. I'm going to give you all the information up front. It's why I do so much content, because now you get a sense of me before we even meet.
Yeah.
And as a client, if you now come into this office, well, I know that you've already probably seen a video. You know, as a client, that I wear a hoodie and or a t-shirt or a sweater, and I throw the F-bomb here and there, sometimes too much for some people. And if you don't like that, you're not going to come to the office.
True.
Just because you come to the office doesn't mean
it's not even personally.
Sorry?
It's not even personal.
Well,
That's how you communicate.
Well, that's how I communicate, right? And I want people to get that sense from me as soon as possible, because let's not waste each other's time. So not that, and what I was saying was not that because you come to the office you're going to be buying or selling or investing or doing business with me, but I know there's a higher probability of you doing that.
Yeah.
And so to answer your question, how do I do a lot of sales? I give all the information up front, let people make an informed decision. I ask, hey, do you want to do business? I think that's something that salespeople don't do a lot of. Like they do a big presentation, they do all the content, they're great at everything, but then they're scared to just ask the question.
Yeah.
And the question isn't like, I'm not pushing and pressuring people. You need to sign right now, Akash, do this right now. It's, would you like to get started?
Yeah.
And then you have the option of saying yes or no.
Yes.
No, no problem. Is it okay if I follow up with you?
Okay.
Yes, it is. Awesome. We'll continue with that. No, you never want to hear from me? Great. We're not going to waste each other's time.
Awesome. It's supply and demand. It's not too complicated.
Actually, it's bang on to what you said in terms of it's not complicated.
Yeah.
It's not complicated whatsoever. I think people make it complicated because they watch some videos or they do some courses. At the end of the day, give people all the information, treat people with respect. When they become a client, try to exceed their expectations, and you exceed people's expectations by finding out what they are. Like, what do you expect from this podcast?
Yeah.
Right? Like, what do you expect from doing business with me?
Yeah.
And then exceed that, because if they say, wow, like you said when you walked in, wow, this office is nice. Wow, Jas, thank you so much for using the team.
Yes.
Well, there's a good chance that you're going to tell somebody about me now.
Exactly.
Right? Because I exceeded your expectation. And then
Loud and clear.
Loud and clear. Thank you very much. I mean, and it's a testament to my team. The last part is thinking long-term. Thinking not only from the client's perspective, which is obviously important. You got to think long-term from the client's perspective, but you also got to think long-term from your business perspective.
Yep.
Because if I were to, you know, some people were like, well, just, Jas, you got to always make the customer happy. Well, I get that. I understand that in theory, but sometimes if you try to make the customer happy at all times, you're going to be out of business.
Yeah.
So you're not going to serve anyone. Like, you're not going to serve the client, your staff. You're not going to be able to pay them. So you got to think long term from the client's perspective as well as your own perspective.
That makes so much sense. Jas, this is all external. You put out positive energy. You help a lot of clients, and then somehow it works out. But at some point, you also have to dig in deeper to bring out that energy in you. What are your core pillars like? Do you have a little bit of conviction, a little bit of ambition, some patience? I mean, what's that internal mindset like? Because
I think
to even bring out that energy, you need to be strong internally.
Yeah, I think, look, I mean, number one would be at the highest, like out of any of the I guess they're verbs, like I failed English, but I guess they're verbs like gratitude.
Yeah.
For me is number one. So for me, I start my day with gratefulness. I know, like, when I lose a client, a video doesn't go well, a podcast doesn't go well, the whole I don't want to fail in my company, but I understand that, okay, if I do, I still got healthy parents, healthy brothers, a healthy wife, I have two healthy boys, and like, once I start my day there, that's the foundation for me. Okay, so I'm very, very grateful.
Okay.
To your other points, I mean, I'm very ambitious. On the same token, people might not understand it, but I'm patient. Like, I'm very, very patient for things to work out, and that sometimes means that I need to have more patience with my staff. I need to have patience with clients, especially on the media side, on my media organization. It's really more of a sales solutions company now for salespeople, where we do education and media. But doing content for other people, the media, it's tough. You got to have a lot of patience, right?
Yeah.
I kind of jumped into it, and I knew that it was going to work. I knew doing video was going to work, so I put myself out there. You got to have the patience for other people to catch up now, right? And so for me, man, I think the core pillar is gratefulness, and I think it's also curiosity now. Like, now I'm at a stage. I just turned 41 a few weeks ago. I'm curious to see where I can take it, because I know, like, I can shut down all the organizations, I can shut down all the business, get rid of my business partners, get rid of all my staff. If I'm just a one-man operation, just myself, I know I can make a living and make my, have a good enough strong foundation. I know that. I'm curious now, where can I take my whole crew? How far can we go? Because I got a couple of people around me, Tyler, Laura, Luke, Way, Steven, Alex. Like, I got some people around me right now that I'm watching, like, they're growing, and they're growing fast, and like they're coming up with ideas, and ideas are great, but without execution, it means shit. They're able to come up with an idea and then execute on it, not needing me. We have a cup here that you're drinking from. It says LDL.
Yeah.
What that stands for is leaders develop leaders.
Okay.
That's what the game I want to play in now. Like, I want to see these guys start to develop their own leaders.
Okay.
It's so gratifying to see.
That makes a lot of. I mean, I understand that mindset. You talked about one man show. Talk to somebody who just graduated, or trying to switch careers to real estate, wants to get into the sales field. What should they be thinking about in terms of getting into the market, trying to grow their business while having a part-time job or something like that? What advice would you have for them?
Look, I mean, number one, make sure that, like, ask yourself why you're doing it first, right? I think why is always the most important question, because that's going to determine if you're going to continue to do it when shit gets hard. As a real estate agent right now, going into 2023, the market has shifted.
Yeah.
The phone's not ringing as much. There's 50% less sales, period. Like, there's less sales happening, so there's less to eat. And the people that are like, some of the bigger producers, they're not going to go out of the business.
Yeah.
They're going to go back to the basis and what they've always done. They might not want to do it, but they're going to make sure that they provide for their families, right?
Yeah.
And so they're coming back into the market. So as somebody who's newer, I want to know why you're doing it. And then you just need to realize that you need to stick to the core values in sales, stuff that I spoke about. But also, let me add to that, you gotta have the persistence to follow up. If you're not somebody who's not gonna take people's no's, you're not gonna get their yeses.
Yeah.
Okay? And that takes a lot of persistence, man. Like, when you hear a lot of no's in a day, like, I hear,
You get dejected.
Wait, 100% I can get, like, to the average person, that's going to beat the shit out of them.
Yeah.
It's going to be hard to get back up the next morning. And I can tell you from somebody who's heard way many more no's than yeses. It's the, whatever it is, 10,000 yeses I've heard in my sales career that have changed the course of my life.
Yes.
But it's a million no's. And I'm probably lowballing it. I mean, for 28 years, it's all I've been doing, Aakash. Selling stuff. So you can imagine how many no's I've heard.
Of course.
But I've always had the persistence to ask if I can follow up. And then that follow-up in real estate, it takes an average of 18 follow-ups for somebody to do business with you.
Oh, wow.
That's the average. So you get lucky. Somebody will just call you and say, come list my house. I want to invest into a property. I want to buy my first property. That's like one follow-up needed. But on the flip side, you might need to call people 36 times, email them, call them, meet with them 36 times before they say yes.
Real quick question, Jas. I mean, after creating content, I mean, you have branded yourself, you have put yourself out there, you've kind of created an authority. Has that number decreased in terms of follow-ups because of your content?
Yes, for sure. But I still want people to understand. Has the number decreased? Let me answer that. Yes, it obviously has, because the content now speaks for itself. But that's never replaced the need for still following up. Like, you're not going to be able to just do a video or 100 videos. Like, I'm 11,000 hours of recorded content now. Okay? A lot of recording. So I got a lot of content out there. I have content that the guys haven't even put out yet. Okay? And it's obviously decreased me needing to call people, because now they're a little surprised when they get me on the phone. Like, there's that weird celebrity stuff. Like, I'm not into it, but I know it happens, right? Because they see all the content, then they actually hear me follow up. But because the market has shifted, I still have to make the same amount of phone calls.
Okay.
My team does that now, obviously. I'm involved as much as I can be, but I have an amazing crew that makes those calls. We had to do in the fall of this past year, we had to do a blitz of 3,000 phone calls. We called 3,000 people in 30 days.
Wow, that is a lot.
If I remember properly, we had about 1,000 people who picked up. I think we did a little over 28 transactions.
Numbers game.
Numbers game. Amazing to do the 28 transactions. If this was 2 years ago, 1,000. If I connected with 1,000 people, we're doing 100 deals. I know that because I know my numbers. But this year, it was at the end of this year, because the market shifted, you have to make more follow-ups.
That's true. Jazz, I wanted to talk about your strategy. I mean, we're going to get into the meat and potatoes of this. You established as a realtor and then you became an investor. Talk to me about that strategy. What is your investing style like? I mean, I know about it, like you invest in condos. So tell me, how is it that you do it? And from the day of you like buy the property and then growing it, cashing it out, refinancing it, and then buying another one. How does that work?
Yeah, so my strategy is quite boring. It's like watching paint dry, okay? It's not only condos. I know I put out a lot of content about pre-construction condos. I think it's one of the easiest investments that any investor can make. Definitely someone who's just trying to start out. So if you want to get your feet wet, a pre-construction is a fantastic way because the deposit structure, the down payment of 20% that's needed in our province is done in installments. So that's why it makes it easier. Like you put 5% now down, then you put 5% in a year, 5% in a year and a half, 5% in 3 years when the building gets built, right? So you can really lay it out. It makes it easier. Is it the best type of investment? Hands down, it's not. Okay, there's so many others. Okay, but I invest into multiplexes. I invest into duplexes. I'm looking for like a triplex right now, and I do that through a myriad of ways. I do that by myself. I do that with my business, one of my business partners. Him and I do a lot of stuff together. My brothers and I have 2 older brothers, and then I also do it with other joint venture partners. Okay. But when I was saying my strategy is boring, I never think about selling a property minimum for 5 years. It's really 10 years. I buy something and then I don't even worry about it. Right now, because interest rates have gone up, I'm not seeing the cash flow that I was used to. Okay? But I also know, to our earlier conversation, this is a little blip. I got to just carry this. And then at the end meaning call it at the end of 2023, I know that rents have also been going up.
Yeah.
Okay, and so in some of my properties, I can increase the rent because it's not controlled by rent control. But what's also happened is the mortgage is getting paid down.
Yeah.
Okay, so I'm building out that equity. Once I feel like there's $150,000, $200,000 worth of equity in a property, I pull that equity out, and then I go buy more. So I'm all about buying, holding, but refinancing.
Real quick question. You said about equity. How much of it is equity and how much of it is leverage?
Well, I mean, majority of my properties right now, I probably have at least 50 to 60% of equity in my properties, right? Because I bought these now.
You don't want to get over leveraged in this market scenario.
No, like I mean, definitely not, right? I'm not that guy. I'm a son of a taxi driver and a factory worker. I watched my parents pinch pennies growing up. Like I saw them count the pennies on the bed, on the mattress as a kid. That stuff sticks with you.
Yeah.
So I'm not somebody who goes nuts in terms of over leveraging properties. I'm also not the most conservative person. I'm kind of somewhere in between there, right? Like I don't mind. I have enough of a stomach. Let me say this, as you can tell, I have enough of a stomach to refinance my properties, deal with a little negative cash flow at times, and continue on because I see what's going to happen long-term growth. Really quick story. First property, one of my first investments was a condo downtown Toronto, 2010. I bought that for $330,000, $339,000. So call it $340,000. 2014, 2015, I pulled out equity. I pulled out about $100,000 to buy another property. When I pulled out that $100,000, I was negative by $200 a month.
Oh.
Okay, but I pulled out $100,000 tax-free. No tax in Canada if you don't sell your property. Bought another property with the $100,000. The negative $200 was for a year. So I paid out $2,400. Okay, the rents went up, covered it. I went neutral cash flow. Okay, 2019, I just pulled out another $175,000 out of that property. Wow. Bought another property in Florida that's I think closing in the next 4 to 6 months. Okay. Why is that story important? Well, imagine I sold it when I was negative $200. It only cost me $2,400 to carry
Yeah.
it for the end of the year. I know if you and I right now, gosh, go to a restaurant downstairs, in 45 minutes, by the time I get a beer, you get a beer, we get some nachos and some wings, with the taxes and the tip, we're at $200.
Exactly. Yeah.
You know what I mean? People they lose their,
Yeah.
their minds when you're negative $200 on a property, but they spend $200 like easily at a restaurant or at a bar. I'm not here to say don't have. I mean, I like to have a lot of fun as well. I like to party, but I also put it all into context. When I'm paying up $200 out of my left pocket, it's going into my right pocket anyways because I'm bringing down the mortgage while the value's going up. That middle part, to your point, is what's equity. I'm a long-term investor for an equity play than cash flow.
Yep.
I love my day job. Yeah. I love it. It's nothing. I don't want to do anything else.
Yeah.
Like you could pay me millions upon millions upon millions of dollars. You will not get me out of what I get to do every single day. It's amazing. I miss it when I'm not here.
Yeah.
Okay. So I'm not trying to get out of my day job. I want the long-term wealth of what real estate provides, the vehicle that is real estate investing, because I know when I'm 65, 75, 80, I'll have an X amount of a portfolio built. I will probably stop refinancing 15 years, maybe 10 years before that, because then I will recoup all those rental if I decide.
Yeah.
Or I give it to my kids. I always laugh with my 9-year-old. A couple of days ago, he's like, Dad, we get the properties. And I was like, no, you don't. Not automatically. If you're an ass to me, you're not getting the freaking properties. I'll give them to my nephews and nieces. My wife and I will give them to charity if we want to, right? But I have the option.
Yeah.
And that's what I love about real estate.
I mean, it also doesn't create entitlement in the kids.
Yeah, that's the toughest thing, man. Not that I have hundreds of millions of dollars by any means. So I'm like some of those Silicon Valley people and the guys and gals that have built like billion-dollar businesses and they have kids. Like I feel for them because I don't know how they're handling it. For myself, obviously my kids have more than I had. Yeah. I also didn't grow up with nothing, but we just didn't have everything, right? Yeah. But for my kids. It's look, man, they definitely have more than I do. Yeah. I think what I'm worried about is the hunger, right? Like, are they going to be hungry?
Yeah.
I don't need them to be entrepreneurs by any means. I don't even need them to be in business. I really don't care what they do as long as they're passionate about it. That's the most important for me, because I just think when you're passionate about something, you're going to work harder at night and you'll wake up a little bit earlier. You'll get to. Nobody will ever know if you're working or having fun. Yeah. And that's a magical friggin' place to be in. My kids, I mean, they got more than I did, man. And so for sure, are they going to be as hungry? We're about to find out.
Yeah. And I really get that mindset that you have about investing. You put your business first. You don't care about if you're losing out 2,400. I mean, when I met you, I saw that you're a simple guy. You're wearing hoodies, you're wearing jeans and walking into the office. You don't have a watch. So you make sure that you're investing in the right places and not in some fancy, whatever that is.
Yeah, look. I'm definitely not here to tell anybody that they shouldn't have the fancy Rolexes and the fancy cars and stuff, because who the hell am I to tell you how to live your life, right? For me, I've had it, and the novelty wears off for me, and I emphasize that because anytime I picked up a new car, man, honestly, Aakash, like I'd be driving on the highway for like 2, 3, 4 weeks, maybe a month and a half. And I'm like, shit, this thing drives, it kind of feels like anything else that I've driven. Novelty wears off. You get the nicer clothes and the nicer watches and all that. And it's just, I would rather, like my buddy, Luke, he's kind of my phenom. He asked me, he's like, Jas, like, you can kind of, what's your dream car? What was your dream car when you were my age? He's 23, I think. And I was like, oh, it's always been the Aston Martin, like from James Bond, okay? And he goes, how much is that? I was like, it's probably floating around 350, 400 grand. He's like, you can get that. Why wouldn't you get it? I was like, well, because if I would have spent 350 grand, even on a lease, for me, that's like 5, 6 employees. Like,
it's a curse.
Like
it's a gift and a curse.
Like all I care about is more people.
Yeah.
That's all I want. All I want is more people, because I know with more people, I get 40 hours of their hopefully their passion. not only their work, hopefully their passion, because I'm going to put better work and I get more done. Especially now in the content world, I just want more content creators, more content. I want more content creators and more people on the phones. That's kind of the two people that I'm always looking for.
Like I get that. I'm from capital markets. I told you, right? I used to trade. I used to invest. I still do, but right now when I'm in Canada, I've not been able to focus too much. I get that when you said you wouldn't buy a car or something like that because you think of it from an angle that you could invest there in a better place.
Yep.
I didn't buy any phones. I didn't buy anything like that just because I knew I had better places to invest in. I didn't invest because my mind by default goes into I'm losing out 20% annually because of this stupid thing.
Yeah, look, I mean, most people would probably think that, okay, I wouldn't buy the car because then I would invest in real estate.
Yeah.
Right now, like today, like it has to be a property that, like, you know, if I found the triplex or like another 10, 15 unit building, that gets my juices flowing right now. But other than that, I'm not even thinking about investing into real estate. I actually think the best investment that you can make is in yourself. And not only with education and courses and seminars and workshops and all that. I think that's great.
Following your content.
Well, yeah. It's free.
Yeah.
You follow it. For me, it's actually investing. The way that I'm investing into myself is through the people. So I get it from real estate agents. I get it from other business people like, oh my God, you got to bring your expenses down. But I'm like, well, Way's not an expense to me. Buying these new cameras, they're not an expense to me. It's an investment.
Exactly.
Way's an investment to me. Alex is an investment to me. I'm going to invest in her to get her to be better at what she likes to do so we can have better quality and quantity in terms of output. It might be in content or sales, whatever it is. But I only think of what other people think of expenses. For me, they're always investments when it comes to my business.
Talk to me just about you were primarily focused on the offline industry before you started the media company. What point did you observe the pattern in the market that you have to focus on content, you have to focus on the media side of the business just because you want to take it to the next level? What was that decision making like?
2019, I heard a word called podcast. And I actually heard it in 2018, sorry. It was right after my partner passed away. And he was kind of the guy that was on stage. We were just kind of getting into videos, and he was essentially the face of the company. And I was his right-hand guy for 13 years. And I always had a knack for speaking, but I was never comfortable in front of the camera. Okay, but I heard the word podcast, and at that time, nobody was even really, other than Joe Rogan, nobody was really doing a video podcast. Everybody was doing audio.
Yeah.
And for me, that was like, whoa, this is awesome. Like, I don't have to be in front of the camera, A. B, being of Indian descent, it's free. That kind of made me happy. You know, my mom negotiates over apples back home, and so I liked that fact. And 3, I knew that with audio, I've always been like, I've been a sales guy, so I've been on the phones my whole life.
Yeah.
Not that anybody's told me I have the most sultriest, sexy voice in the world. Nobody's ever told me that my voice sucks.
You have gift of gab though.
Well, the gift I got, but also the sound of my voice. Nobody's ever told me that it's not good. I was like, I can do this. I think I'm going to get comfortable. I'll be comfortable with this. Let's turn on the mic and let me just go. And so once I heard the word podcast, figured out what it was all about, that's it, man. That I got hooked. I got obsessed with it. I did a lot of the episodes by myself at the start. Then I started to bring on guests. I just had a lot of fun. Like, if I could wave a magic wand, I wish I can do content, like actually be shooting content. I would say 80% of my day. Right now I'm at 50. 50% of my day probably revolves around shooting content. I don't edit and stuff. I have the team to do that. I suck at that kind of stuff. But I fell in love with it because then what started to happen the first time I turned on the camera, one of my guys that was with me at that time, he's still with me, Steven, but that was kind of his role at that time. He's like, I can just cut some stuff up for you. I was like, what does that mean? He's like, well, we did it on video. I can give you like 5 clips and then you can put it out on Instagram. I was like, oh, let me see that? And he did it. I was like, I just got 5 pieces of content plus the podcast? Oh, what if I just went a little bit longer? Do you think we can get more? He's like, yeah. I was like, oh, can you actually stop it right there and give me an image? He's like, yeah, we can just, and I was like, you know, I said something there. Can you just put a little quote on it? And then we started doing one 45-minute podcast, and I got 20 pieces of content. I was like, done. The only problem at that time was Steven couldn't do all 20. Not because he wasn't talented enough, he just didn't have enough hours in the day. Got another person, got another person, got another person. Now I have 5 people on my own personal team, and then we have another 6 people that do the work for other real estate agents and salespeople.
Right. And how much impact has it had on your business throughout your journey? I mean, you don't have to put out numbers, just quantify it in terms of
millions of dollars. I'll tell you. It's made me millions of dollars. Like I'm not even saying that to brag. It's not a humble brag. It's to tell people that if you invest the time and the money, invest the time and money into content creation, and you actually really enjoy it. Now you got to understand, like, I don't think I'm the most talented content creator, but I don't think I like suck at it. I'm probably somewhere in between. I'm not as good as my best video. I'm not as worse as my worst video. I'm somewhere in between. If you have a little bit of talent in it, you actually invest the time and the money, time to do the content, the money for the equipment and people, the return will be huge.
an audio or video.
All.
All.
If you can.
If you can.
If you can't, the reason I say if you can't is because some people, they're about to faint the second you put a lens on it. I would try to get over it to see if it's like just one of those times where you're uncomfortable, because I've seen some people, when I started with them, like, they were not comfortable once the lens got turned on, but now a year later they're shooting videos like crazy, you know. So you got to try to get over that hump. But if you just can't, then do audio. If you can't do video, you can't do audio, then maybe just do written word. If you can't do either, you're not going to be able to build a personal brand. I mean, unfortunately.
Just about that. You put out content, you made millions of dollars. That should be used as an ambition, that should be used as that it is possible to make money out of making content, but you shouldn't have that expectation. Now that, I mean, you are making millions of dollars only because you've had experience of 18, 20 years. Somebody who's just starting out, they wouldn't be able to achieve that. And they've come with the mindset that I'll be making millions of dollars just by making video.
No, exactly. So that's not, so, and I'm glad, because let me give some more context there. My revenues is not made from being an influencer through my content creation. My content creation gives me awareness for my businesses that I then monetize. Completely different. The influencer route, I know nothing about. I don't knock it. There's people who are making billions of dollars. Great. It's not what I do. I create content. I get people's awareness. They then, the ones that like it, get in touch with me. They then have the option of doing business with me.
It's just a gateway to bring more eyeballs to a business.
It's the best gateway drug. Back in the days, they used to say marijuana was the gateway drug to all the other drugs. If you want to build a business, the best gateway drug to building a stronger business is content creation. It's just a matter of finding what you're naturally good at.
You should clip this.
Well, I'm sure my team will. I'm sure my team will. They timestamp stuff. So we got that down to a science, but I appreciate you calling it out. That is what I do. I put out the content. Whoever likes it, great. Whoever doesn't, that's okay. Then they have the option of doing business with me.
And talk to me about execution. You make content. Is it just focused on one platform, or you blast off on all the platforms?
Yeah, so I'm probably heavy on podcasting platforms, so all of them. I use one distribution company, a software, I guess it's called software, Libsyn, that distributes it on the iTunes and the Spotifys and everything. And then the other platforms, I have my own app on iTunes, in the App Store and the Play Store. It's a free app that everybody can download. That's where you get all my video content. But then I'm quite aggressive on YouTube, Instagram, TikTok, Facebook, and LinkedIn. Those are kind of my main pillars that we produce content for.
And there's another side that people don't see. When you haven't made content, you kind of look at people and then you get dejected not dejected, you could insecure in terms of that you're not that good enough. You haven't built yourself. You cannot sell real estate through TikTok or Instagram Reels or LinkedIn marketing. What advice would you have for them? Should they be looking at competition or they just be focused on themselves?
I mean, I think the biggest poison, and it's not only with content creation, it's with sales, it's with content creation, it's with investing into real estate, it's with anything. The biggest poison is comparing yourself to other people because you don't know their story.
Yeah.
You don't know where they came from. You don't know their struggle. You don't know if they were born into it. You're also not them. Not to get all philosophical, but the truth is, you were put on this, or I believe, you were put here for a purpose. Your job is to find that. How do you find that? In my opinion, try as many things as you possibly can. See what you're good at. See what you enjoy. That's probably the mixture of what you're good at and what you enjoy is probably the purpose.
Yeah.
Go all in on that. To compare yourself to someone who's doing better than you in video content creation and sales will stop the execution.
Yes.
Because now you're thinking about someone else. Every second that you're thinking about someone else is taking you away from executing on what you need to be doing.
What's that fine line between comparing and competition?
I would say comparing and
Because competition, you need to look at your competitors and then go all in and then outperform them.
Look, I can only talk about me personally, and I don't know if this is going to resonate with everyone, and you can ask my team. I'm not like numb to what my competition is doing, like what people would call competition. People in my market, okay? There's 76,000 real estate agents in the GTA. 5% of them, okay, do 95% of the business, okay? So I know the 5%. I know who they are. I know nothing about their business model, nothing.
Yeah.
So here's, I think, answering your question about the fine line. For me, I think about them when I see them.
Okay.
If I don't see them, they're never in my mind.
Oh.
I have 14 people that I'm worried about on a regular basis outside my personal, like my family is pedestal stuff. Like I don't show my family. It's a private part of my life, but that's the stuff that like, I'm constantly thinking about the health and well-being of them. From a business perspective, I got my core group. That's the only people I'm thinking about. So I'm like the horse that has the blinders. The reason that the horse has the blinders, if they don't have blinders on, they're going to get distracted by the other horses. Okay, in a horse race. I'm identical to that. I get distracted quickly. I know my nature. And so what I started doing probably a decade ago is I don't even look at anybody else's business model. My team or somebody might talk, my business partners will say they're doing this. I'm like, who gives a shit? That's not our strength. And it's probably our weakness. Or it is it's not our weakness. Here is our strength. Let's go all in on that.
Yeah.
We have a core group of strengths in both organizations. The one that I did in my real estate, I built it in my real estate side. I took that into the media, to the sales solution side for from the ground up company, which is events, phone calls, content creation. That's my business model.
Yeah.
Everyone can steal it. It's not ripping me off if I'm telling you to do it. Events, phone calls, content creation. I did it in real estate for 18 years. I just brought it over to From the Ground Up, which is now going on to its 19th month, I believe. We're coming up to our 19th month. And so what everyone else is doing, people have been doing the Facebook and the Instagram and the Google AdWords, and not to say that those are not good, but it's not an expertise of mine. It's not a strength of mine. It's not that I can't find out. I just know that the events, phone calls, and content has always worked, and the return for us is huge because our costs our expenses there are very low.
Okay. Before I wrap up this podcast, Jasmine, touch upon that topic. You talk about, in a sense, what I could understand is you have to be authentic, you have to be yourself when you make content. How much, like, when somebody is just starting out, they've understood something, they've done a degree or something in any industry, not just real estate, how much of it has it been because of that authenticity, how much of it has brought that impact on their business or whatever they're trying to build, personal brand or whatever that is? Is it something that you should be only focused on the strategies, or you should be yourself and then be authentic about that business or niche that you focused on?
Oh no, I think you to make it in business, you gotta, in my opinion, do more of what comes naturally
Yeah.
to you. And I think that would probably be, I don't know the exact definition of authenticity, but to me, it's like, what do you naturally like and what are you naturally good at?
Yeah.
And then do more of that because, again, you're going to execute at a higher level. You're naturally,
Yeah.
like, I'm up sometimes and I'm not trying to put out like hustle porn, like you got to work 24 hours a day. I'm not putting that out there. But I naturally am sometimes up till 1:30, 2 o'clock in the morning researching. But if you ask my teachers in grade 6, 7, 8, 9 in high school what my researching skills were, there was 0 at 100. And they would say he doesn't do his homework. He doesn't care. It's not because I was dumb. It's because I wasn't like interested in it.
Yeah.
My gym score, like in gym class, was really high. You know what I mean? When it got into the calculus and the finite and stuff like that. But because I didn't enjoy it. But me now, because I'm naturally researching on how can we provide some better service, how can we create content quicker, how can we be better, I'm looking at, being a better leader. Those things are not work to me. And so that's why I think you first find what you're naturally good at and what you enjoy, and then start a business around that. That's what I did. It works for me. It might not work for somebody else. I just now know I've had enough conversations with people very similar to the question that you just asked me, and I've seen people kind of use that strategy, and it's working for them. And so I would implore people to try it out more.
That makes a lot of sense. Jas, last question. I mean, you've had a lot of experience and you've become this mature in this industry. You've become more self-aware. Speaking, if I had to imagine, if I were in your place, what I'd be thinking, how much patience would you need to even like have that stomach to take in all these punches when the market throws at you, and then still keep grinding every day just to have that hope that this is going to work out, have that belief that you know what you're doing and this has played out in the past and it is going to continue to play out in the long run. How much of it hasn't been out of the place of patience and the belief that you have in yourself?
Well, I think it's both, right? I think I have the patience because I believe in myself. But I don't want people to mix up what I mean when I say patience. That doesn't mean you just put your feet up and let things happen and wait for things to happen. You need to execute on things daily, right? Again, that doesn't mean that you shouldn't take time off and all that kind of stuff. So put that stuff aside, right? Take your vacations, take your day off, whatever it is. Take an hour in the day, whatever you want to do. But you have to execute daily, but for the big audacious goal, you need to have a lot of patience for that. And that
You're an alpha. How difficult is it?
Yeah, it was. You know what, Aakash, man? It was difficult. Maybe a decade ago for me. Maybe even 5 years ago, it was probably difficult. But when my partner passed away, it put things into perspective for me. Like, because I didn't lose a partner only. I lost a mentor, and I lost like a third older brother to me. And to get back up from that beatdown, like mental, emotional beatdown, I knew that I needed to have a lot of patience to rebuild. Like, this wasn't going to happen overnight. I knew it. I intrinsically knew that I was not going to be able to fix what has gone wrong now. Not having that. Like, it was such a big piece that was taken away from me that's when I started to just say, okay, you know what? Let's now think about doing a podcast, for example, but who cares about the first 50 episodes? I remember saying back then, maybe in our 200th episode, we'll have our own studio. It took me 150 episodes. I have my own, this is not it. This is not where I shoot my podcast.
Okay.
I have a studio just outside this office, okay? And I knew that it was, but 150 episodes took me 3 years. An episode a week.
Oh,
An episode a week.
that's a lot of work.
It's a lot of work. Every
You
single.
have to book a guest and then they reschedule.
You know how that happens, okay?
I had to follow up with a person that I was first interviewing for 4 months,
There you go.
back and forth. It got rescheduled thrice.
Exactly, right? And so to have that persistence again, following up. You need to, like I said, man, it was difficult maybe 10 years ago, but no, and 5 years ago, it kind of made sense to me. And now, like, it just doesn't matter. Like, I know I'm going to keep trying. I don't know if everything's going to, all my dreams are going to come true, all the stuff that I want, but I do know for sure I'm having a blast just trying. I love the process. I love what we're doing right now. You know, I said to you, I think I got like 35 minutes or 40 minutes. I could do this for 4 hours easily. You know what I mean? Because I know what content we're getting out. We're trying to bring, I'm just hoping one person on the other end of this.
Yeah.
I'm not doing it for your hundreds of thousands of viewers and listeners. I'm doing it for one person that just actually says, you know what? This fucking guy resonates with me. I'm going to take action tomorrow.
Yeah.
And they actually get inspired to take action.
Yeah.
I
I
love
mean,
that stuff. I love
Jas,
that
this has been incredibly beautiful for me. You've been very, very patient and very kind to me. I love this. I mean, I was super pumped for this podcast. I mean, I was confident you'd have a lot of value to add. I mean, I hope the listeners found it useful as well. Jas, please let them know what's your handle. I mean, where they can follow you, where they can hit you up, ask you questions. I mean, Jas is super kind, by the way. I mean, he answered me. He'll always answer you too as well. I mean, please let them know where they can. Please let them know where they can.
Again, thank you for having me. I'm not hard to find.
Yeah.
On all the platforms. I think the easiest place to go is to Google my name, first and last name, Jas Takhar, and then figure out how you want to consume me. Video, audio, the written word. I have them all. But I think the best place to get a lot of value would be the app.
Yeah.
It's free, as I mentioned, but all my conversations with business leaders, real stories, like not all people that I interviewed, and I do have the multi-billionaires on it, but I also have some people who are just starting out in business. And so they might be a little closer to where you as a viewer and or listener are. And easily, if you have an Apple, go to your app store, search my first and last name, I'll pop up. If you have an Android, go to the Play Store, put my first and last name, and I'll pop up. And then you'll decide if you like me. Do you like the good-looking Indian guy? Me, not him. Or I'm too crazy for you. And at least you get to make that decision.
Awesome, awesome. Jas, thank you so much. I'm going to be one of your clients as well. I'm going to come to you when I buy my first home. You guys should look him up if you're trying to buy a new house. He's running an amazing company, real estate company. If you're into the media business, look it up. I mean, this has been amazing for me, Jas.
Awesome, buddy. I appreciate you. Thank you so much. I appreciate you. Thank you.
Thank you. Have a great day, guys. Take care.